It is time for another weekly market review where we analyze the markets to see if a correction or crash is coming so that we can do what? Protect our downside. Because that's what we do at Fallible, right? Risk management. It is the number one most important thing you need to be successful in the stock market long term. But of course, everyone forgets that, especially as bubbles really start to take off as we're seeing now. But we'll talk about that in a second. So okay, what is going on with markets? Well, as always, we're going to go straight to MacroOps, our global macro research firm. The best research around. And I am fully biased when I say that, and that's okay. But first up, we got Bank of America's latest global fund manager survey. And as the name states, this is a survey that they send out to fund managers to kind of gauge sentiment and of course positioning. And why in every video do we talk about sentiment and positioning and all of this? Well, because when you're playing the market, you're playing other people. So what we say at MacroOps, what you're doing is playing the player. You got to know what other investors are doing so you can adjust based off that, and that's how you gain that edge and make money. So just take sentiment as an example, and I explain this every week, right? If investors are super bullish, then it might be a bearish sign because they're already fully invested and all there is left to do is sell. Same thing if investors are super bearish, then it's time for you to get bullish because there's a lot of buyers on the sideline, a lot of bears left to convert. And we'll talk about converting bears in a second. And now that we're talking about bears and converting, I think about all my gay friends who said I would make a great bear, which is great to know that you have options in case being gay ever became a choice. So hopefully one day we'll get there with technology. But back to our Bank of America survey, investor sentiment is bullish and cash right now is at an 8-year low. And this is what I was talking about before, right? If the market is super bullish, then they have low cash levels, means most of their money is invested. No one's sitting on the sidelines waiting to buy in. And the Bank of America bull and bear indicator is a bullish 7.1, meaning a correction is imminent. So is that it? Is that the end of the video? We know a correction is coming? No, it is not. We don't just take things off one survey. You got to use multiple inputs here. So going further on the cash levels, they're at 3.9%, which is the lowest level since March 2013. So all in all, sentiment and positioning are hot, as Alex says right here. He's the lead researcher in MacroOps. But if you've been focused solely on sentiment and positioning, then you would have been kept out of this very bullish market, which is why you need to look at multiple inputs like breadth, liquidity, and of course, the tape, meaning price action. And right now you can see the NASDAQ is as bullish as ever. And our next target move is at the 14,000 level. So at the end of the day, I love just looking at the tape. It's like the Paul Tudor Jones saying, at the end of the day, he's a slave to the tape, because this distills everything that's happening because markets are so endlessly complex and it gives you a nice little number. Is it up or is it down? And I know in the last market review video, I was showing you those TikTok people who that guy was saying, I just buy when it's going like this and then I sell when it's going like this. And we're all making fun of it. And then someone brought up in the comments, they're like, AK, isn't that what you do? In a sense, yes, those TikTokers are using a very basic momentum system. But the way things go in any activity is that when you start out, it's very simple. Then you run into problems and it becomes complex. And then once you figure it out, you're able to simplify it again. So not to brag here, but I would say our system is more on this side, the simplicity on the other side of complexity versus the TikToker over here. It's the same thing as saying the guy at the gym when we're playing pickup basketball is doing the same thing as LeBron James. No, they are very different. And it's that concept of simplicity on the other side of complexity. But yes, in its most general sense, I would say price rules over everything. And you can see here from Bank of America, this is officially the greatest rally of all time. We did it, guys. Just clap for yourselves, all the buying we've been doing. Ever since 2009, what a massive bull. It just doesn't stop. It's beating out the 29 rally, the 38 rally, the 74 rally. Nothing's come close. And speaking of hot sentiment and crowded positioning, Goldman Sachs risk appetite indicator rose sharply to close above 1 last week. And that's a level that's only been crossed a few other times over 30 years of data, meaning people are really getting extended. That's what's fueling this bull market, right? You can see right here, this orange line, only a few other times in history. Now, historically, that has not led to good forward returns. You can see right here when that number is 1 or above, the 1 month return is -%, 3 months negative, 6 months very low, 1 year very low as well. Once again, from Bank of America, a record number of investors are taking higher than normal levels of risk. Record high right here where this is circled. So when we're looking at all this data and putting it together, what does it say? Well, it's saying that we are not going to see a crash or correction, at least in the intermediate term. What's actually happening here is that we're kind of heading into into a market climax. This is a buying climax, and it happens during bubble formations, which is exactly what's happening right now. Now, here's the thing about buying climaxes. Your rational brain is going to say, hey, how long can this go on? And then what happens is that it keeps going way past what you thought was possible, and then it goes on to prove the saying that says markets can stay irrational longer than you could stay solvent. So it's really important how you play these buying climaxes, because this could last for another year, even another 2 years. You don't know. The only time it ends is when the very last bears finally give in and buy. When that happens, then you could say it's the top. And I get a lot of flack every time I release a video saying, oh, I'm so bearish, and I've been bearish for the last 10 months. Well, no, I mean, you guys who have even made it to this far in the video, you know I've been bullish for a long time. There is no benefit to being a perma bear. You actually get way more benefit being a perma bull, because over time, at least in the US, our markets have continued to go up. But here's the thing that I do try to be, and that's a risk manager. And that's very different from a perma bear. So I'm not trying to throw water on the fire. I'm happy to let the fire keep running. Like, I'm never that guy who wants to stop our group of friends from taking that 13th shot. I normally like to keep going until at least 4:30 in the morning. Then I get sleepy. But I make sure that I don't have to do anything the next day, or nowadays it's more like the next 2-3 days, which is sad what happens when you get older. But that planning ahead is the risk management part for the party that we're having right now. And that's the same way you got to approach markets, because you definitely want to play this upside. A buying climax, like, things can get nutty, and they already are, right? So you don't want to miss out on those gains, but you got to have that exit plan. And yes, you might sacrifice some gains because you have the exit plan and the risk management, but when the thing finally turns around, that same risk management that kind of reduced your gains a little bit on the way up is going to lock in those gains when the thing collapses. And when it collapses, that's where most investors are going to get screwed. I keep saying that, and that's because it's true. It's happened every time in history, in every bubble. The same thing is going to happen this time. So again, you always want to play that upside while watching the downside. That's what we do at Fallible. And the one thing I wonder about this bubble in particular is if it will play out much faster than previous ones because of the internet and social media. So no more having bubbles for years at a time. Maybe it all plays out within 1 year. But there's something really important you need to do in a market like this. And what you need to do so you don't get crushed is have a robust strategy. Now, what's that mean, robust? Well, when I'm saying robust, I mean that it's something that survives through different types of market cycles. So I was talking to my partner Keith the other day. He's my mentor with all this trading stuff. He's been doing it for 40 years. He's the guy who had an office next to Dalio. So yeah, even I have my mentor, and we go over this stuff and I tell it to you, because unfortunately I don't have as many years in the market. Even though I know I'm looking older and older. You can't see it because I got this hat on, but my hair is graying at an alarming rate. And I feel like this is one of the worst side effects of this pandemic. I'm about to come out just an old man. It has accelerated my aging. I'll be walking with a limp soon, and not like a cool 90s limp, but an actual limp of an old man. But anyway, we're talking about, the crazy stuff happening in the market right now, all the penny stock pumping. This was an interesting chart I found on Twitter recently. Penny stock trading volumes, look at them in December, just insane. And we've already talked about this in previous videos, but this is where a lot of the speculation is happening. Flip 1,000 into 100,000 in just a few days, right? Well, here's the thing. Markets, while they stay the same, they do change. So right now, in this particular climax buying bubble that we're talking about, a strategy like the penny stock strategy, it does work. Now, like we said before, where those people get in trouble is when it stops working and they keep trying to hit it, and that's when they lose everything. Because the bad actual trading habits that you develop in a market like this, when they carry over, when the market changes, that's when you really get decimated. And bad habits are allowed when you have a bad system or a bad strategy. So when I talk about having a robust strategy, it's one that's not going to fall apart when the market changes. So you guys know our approach at Fallible is momentum. And momentum is an approach with an edge that's not a fad. It's not going away. It's worked for hundreds of years, and it's going to continue to work. It's going to work great during this whole buying climax, and it's going to work great when the market changes too, because part of our system is that risk management. That's probably the most important part of any strategy to make it robust through different cycles. And it's funny, at the top of this research, we have a quote from Nassim Taleb that Alex put in. So Taleb says, they think that intelligence is about noticing things that are relevant, detecting patterns. In a complex world, intelligence consists of ignoring things that are irrelevant, avoiding false patterns. And this just reminds me, and there's a bunch of quotes like this, where basically we're living in a world where there's so much information that your edge doesn't come from trying to process all of it. It comes from getting rid of what's not important and focusing on what is important. And it reminds me of an old trading story where there was a man who lived up in the mountains, and he was like a billionaire. And the way he was a billionaire was was incredible. He would just get the newspaper sent to his house once a month. And based off what the newspaper said, he might make a trade or two. But otherwise, he doesn't look at the markets, he doesn't talk to people, doesn't do anything. Just lives in the mountains. And his returns were incredible. Now, this story or fable, who knows if it's fully true, but the idea is that you need to cut out all of the noise. So when we look at our system, you know that we have the TSI scanner, which scans all the stocks in the NASDAQ. And then it ranks them based off this number right here that tells you how high their momentum is. And then all we do with our system is rotate into the top 5 highest momentum stocks. We do that each month. Now, of course, there's more to the system, mainly being risk management and everything that comes with that. That's the most important part. But at the end of the day, what are we doing here? We have it all systematized. We don't need to look at anything else. So all these videos that I do, sure, they're interesting and we learn a lot. But if we're using a system like I'm using, I actually don't need to look at anything. That's why I say I can only look at markets 20 minutes a month, because I don't need to do more than that. And it's not exactly living in the mountains with just a newspaper, because who wants to do that? But a good system gives you that ability to step away and not worry about the market constantly. The stress that comes with trading and investing, it's gone. Like, I'll always do these market review videos, right? Because unfortunately, at the end of the day, no matter how much I preach about a system, not everyone is using one. And again, this research comes from macro ops, where we have clients that are doing way more because they have way more money, into the billions. But again, at the end of the day, all I need is a system, because I know it has that robust edge. It has the risk management. I don't have to worry about market news at all. Only thing I got to worry about is following my system. And if you're interested in learning more about how it works so you could use it yourself, then definitely check out our training right here. It'll teach you everything. This is the same system I use and most of our Fallible members use too. So this training will show you how to do it, and there'll be a link in this video and down below in the description and comments. And like I said, we rotate once a month, right? And it's actually at the beginning of the month. So that rotation is coming in a few days. So it's a great time to test out the strategy if you haven't already. Again, click this right here to go to that training so you can learn exactly what we do and how we do it to have a robust strategy that's going to survive and thrive in this market bubble that we're in, but also make us money when the thing turns around. Click this training right here and I will see you in it.